Hey everyone, thanks for joining us today. It's March. It's been about 6 months since we started this channel. We have over 90 videos, over 800 subscribers, and we thank you very, very much for tuning in. A lot has changed in the past 6 months, so we wanted to do a 6-month review.
Yeah, that's right. So we're going to do a full chip stock investor portfolio review. We'll do an outlook for the remainder of 2023, and then take a few minutes and maybe outline some of the chip stock investors, maybe I should say plural, community development that we're working on. And we'd like some feedback from all of you that tune into these videos and try to find out what it is you like, what you don't like, and help us out, how we can improve. Before continuing, let me remind you to hit the like button and subscribe to the channel if this video is helpful as you do your own investment research and increase your knowledge of business and technology. We really appreciate the support, as subscribing to the channel helps us continue putting out content like this.
To start, why don't we take it back a little bit and we can talk about why we decided to start Chip Stock Investor. So Nick, I'll let you explain why you chose chip stock investing.
Yeah, there were a number of reasons why we wanted to start this channel. The first is I love chip stocks. You can think of them as like the Legos of all computing technology, and computing technology is growing in importance. And I think that's the second reason why we wanted to do this channel in particular and focus on semiconductors is we saw a bit of a disconnect, especially in the investing community, between how semiconductors actually work and the financials of it, the business aspect of it. And then third, so we started this in September. You and I started this in September 2022. Depths of the bear market. By many counts, we're still in the bear market here 6 months later in March 2023. But we really thought semiconductors would lead the way out of the bear market and pave the way for the next bull market, the next economic upcycle. And so that's why we started the channel. And I think a lot of those reasons why we started it, I think have played out. So let's talk about that.
It's been a very wild ride the past 6 months with the market for sure, and it's been fun for me to learn about this part of the industry with you. So, how is the portfolio doing after the past 6 months? Where are we at?
Okay, so I think maybe where we should start is we fired up the actual live portfolio on a site called Stock Card. And we actually started that on October 17th, or at least it went live on October 17th, which is, in hindsight, dumb luck, was almost exactly to the day the bottom for semiconductor stocks, actual stock performance. Obviously, the businesses themselves, many of them are continuing to struggle during the bear market, but the stocks themselves have bottomed. So starting from that point, October 17th, the S&P 500 is up just shy of 10%. And then for our baseline here, we're going to use the VanEck Semiconductor ETF. The ticker symbol for that is SMH, largest semiconductor sector ETF. SMH, it's up 45% since October 17th, 2022. So just over 6 months, S&P total return, including dividends, just shy of 10%. VanEck Semiconductor ETF, up over 44%. Massive outperformance, market-beating return for semiconductor stocks. Yeah, chip stocks are beating the market. I think the signs are starting to compile here that the bear market is beginning to find a bottom. But our thesis that chip stocks would lead the way higher has indeed played out.
So what has changed in the industry? Why do you think that is?
Well, what has changed, I guess, is specifically for the businesses and the way the business themselves are performing. Things have gotten worse since October. So PC and laptop and smartphone sales have continued to deteriorate 6 months later, although we're probably at a bottom for that. Some of that weakness has begun to spill over into the data center side. A lot of businesses have also pared back their spending on equipment for data centers and the cloud, although it looks like that is going to be a very, very shallow dip. So with the businesses themselves, that's what's changed. And we do know now some outlook for the rest of the year. It looks like both general segments of the chip market, the consumer side and the enterprise side, the enterprise being data centers and the cloud primarily, looks like they're going to bottom out here sometime during the second quarter of 2023. And then these businesses will resume their growth trajectory going forward. So it's interesting. These semiconductor businesses are highly cyclical. The stocks are even more so cyclical, but the market always tends to sniff these things out ahead of time, and thus the stock outperformance over the last 6-month period. And so the other thing has changed, obviously, is the stock prices. Chip stocks got absolutely clobbered the first 9 months of 2022, and now they are paving the way for the next bull run. So I think we need to revamp our outlook on some of these. Not so much the businesses, because I think they're going to resume growth the back half of 2023, but the stock prices have already priced that in at this point, thus the big run up in stock price.
Yeah, you're right. It sounds like a lot of things have changed in the past 6 months, and that has been reflected in the market. Let's actually jump back over to Stock Card and talk about our top 3 holdings. So tell me a little bit about our first holding, NVIDIA.
So NVIDIA, for a couple of reasons here, is our top semiconductor stock. Actually, for you and I, our top stock holding period, which it's been in and out of that position for a number of years now, but handily back in pole position. And I think NVIDIA needs no real introduction. Traditionally a video game stock, but there's so much more now because of their push into data centers. And then, of course, the Chat GPT thing, Microsoft investing in Chat GPT parent OpenAI and sort of setting off this AI arms race. Behind all of those AI services is an NVIDIA chip, almost every single time, like 80% plus market share. NVIDIA, for a long time now, I think a lot of investors didn't know this, but now it's abundantly clear. NVIDIA is the platform for AI. We did take some profit off the table. We were moderately aggressive buyers last autumn. Booked a huge gain here. You can see up 84% from where we took some profit off the table back in February, up another 30% plus since then. So more than doubling in price since October. I think this has gotten incredibly frothy. I get really uncomfortable when everybody and their grandmother knows about a business and wants to buy it. So we're being very patient here, still very bullish long term, but not a buyer right now. Again, took some profit off the table. Short-term bearish, still long-term bullish on NVIDIA.
I think you're right. Everyone and their mother, including my mom, have heard about NVIDIA at this point. So it's obviously a big player in this space. So I noticed that our second holding there is AMD, Advanced Micro Devices. What's going on with them?
Yeah, AMD, again, really solid return, up almost 70% since the bottom in October 2022. And actually, I'll just lump ASML here as well. This was a new position for us, actually, that we initiated in October, and it's up over 60% as well since that bottom. AMD in particular, down in the dumps, I think, at the moment, again, because of those flagging PC sales, but an expectation that they will return to overall growth second half of 2023. And of course, also a very important player in data center construction these days, taking lots of market share away from Intel in that department. And then as far as ASML Holding, that's the company that has an absolute monopoly on extreme ultraviolet lithography equipment. So that's a critical step in the manufacture of the most advanced chips. The big rally, because basically they're going to have a rebound in their sales of EUV equipment in 2023. This one makes me a little bit nervous as well. The valuation's a bit high, but still long-term bullish. And maybe I'll just back up to AMD and mention that this is one of our top picks that we're presently buying for 2023. I think AMD will continue to do very well as they continue to grow in the data center market.
Okay, so 3 more we have coming up here. Broadcom, Qualcomm, Marvell Technologies. Obviously, Qualcomm is a very well-known company. Maybe you could tell us a little bit more about Broadcom and Marvell and how they fit into this space.
Yeah, the comm chip stocks. Broadcom, big outperformer of the market, slightly outperforming the semiconductor ETF overall. Broadcom, not very well known, but they have a lot of chips that maybe they're not the most advanced or like the sexiest computing silicon out there, but you'll find Broadcom all over the place. They're a key Apple supplier for the iPhone and the iPad. They do lots of work in the infrastructure, communications infrastructure market. So internet infrastructure, 5G wireless, and so on. Broadcom's an absolute giant. They're in the process of acquiring VMware, which would make them basically a 50-50 split between semiconductors and software, specifically software designed for the cloud. So this one's interesting. We like Broadcom for the long term, even though it's not as great a value as it was 6 months ago. And then maybe we'll drop down to Qualcomm, which again, I think probably needs no introduction. If you have a smartphone or a wireless device, you've got Qualcomm chips. This one's been an underperformer compared to other chip stocks. And I think a lot of that has to do with the smartphone market being particularly bad. They are going to, at some point, lose their Apple business, although they've done a great job finding replacement growth markets for that. So I think it's underperforming many other chip stocks at the moment, but we really like this one. I think with AMD, paired with AMD, Qualcomm is another top pick for 2023. We think eventually Qualcomm will also return to growth, and the stock price will eventually reflect that. Qualcomm's cheap. And then rounding out this batch of 3, Marvell, sort of like Broadcom, they do a lot of infrastructure. Not exactly a well-known play, but all over the place in data centers and communications infrastructure. Again, a bit of a delay for the company because of their product mix. They will return to growth the second half of 2023, but their profit margins might be delayed in a rebound there. So again, another underperformer in the last 6 months, but long-term still very bullish on Marvell Technology.
Okay, up next on the list, Applied Materials. And I know you are a big fan of this company and have been talking about it for a long time. We did a video recently about how Applied Materials works with another company that we own, ASML. So tell me a little bit more about Applied Materials.
Yeah, Applied Materials, our third top pick for 2023. Applied Materials makes the equipment that semiconductor manufacturers use to make the chips. So Applied Materials has the broadest portfolio of that equipment used to make chips. So you can think of ASML as a specialist. Applied Materials is a generalist. Both incredibly technologically advanced businesses. They absolutely gush cash. To quote one of our colleagues, Billy Duberstein, AMAT just increased its dividend and its stock repurchase plan. We think this stock is very, very cheap for the long term, even though it's up 60% in the last 6 months. We're still buyers.
Yeah, I've been hearing about this company for quite a while now. All right, let's move on to Micron. Tell us a little bit about what Micron does and why we are still invested in this company.
Micron, the memory chip maker. I've done a very poor job in managing the cycles with Micron over the years. Eventually, at some point, memory chips are the most cyclical part of the semiconductor industry. They're a basic commodity. They're very, very simple in compared to some other types of chips. Memory is a very simple component that it gets used in all sorts of larger chip systems and computing systems. So it's a commodity. It's the most cyclical part. We think Micron is going to run higher when it returns to growth, but we're going to need to trim or eliminate this one from the portfolio at or near what we think is the next cyclical top. Maybe that's in 2024, maybe in 2025, but that's the deal with Micron. You really have to be careful in managing the ups and downs with this one.
So what you're saying is we have a lot of opportunity for improvement on this one. Okay, next up, Air Test Systems. Now I know this one is kind of a specialty company. So tell us a little bit about why this company is so central to chip stocks.
I really like this one because it's a small cap. It's a very, very small business. And so therefore you're not going to get it in a semiconductor ETF. There are three primary semiconductor ETFs out there. SMH, the one we mentioned earlier, being the biggest. Air Test Systems is not in there. This company provides testing and burn-in equipment for silicon carbide, which is the chip substrate used in electric vehicles, and then increasingly renewable energy systems, and longer term, probably data center photonics. So like the interconnect between different chips in a data center. We see massive growth for Air Test Systems over time. But again, this is going to be a highly cyclical one by nature because of the business. It's an equipment maker, kind of like Applied Materials and ASML, but more like ASML. It's specialty equipment. So it's going to be highly cyclical. It's very small. We've doubled our money on this one since we bought it in October. Made a small sale to take some of that profit off the table, and you can check the most recent video on Air on when we would re-enter and buy more of it again.
Okay, up next we have Universal Display, Arista Networks, and Fortinet. And honestly, I don't think that I would think of any of these as chip stocks. So why don't you explain them to me?
Yeah, we'll run through these next three quickly here. Universal Display just recently did a deep-ish dive video a couple weeks ago. Yes, screen technology, so high-end TVs, high-end smartphones. It's carbon-based material that when an electrical current is applied, it lights up. The semiconductive material lights up, produces bright light. So it's a semiconductor stock. Nice rebound, beating the average chip stock ETF performance. We like this one long term. We think this one is it could be a decent buy later this year if we get a pullback in stock price. The next two are, I think we'll talk about this here momentarily, but not exactly chip stocks themselves, but prolific users of chips. So Arista Networks, the data center switching company and engineer. Fantastic performance there. And again, as the age of AI kind of dawns here, we think Arista Networks has a very bright future ahead of it, long-term growth story that we think will continue. And then, of course, Fortinet, a cybersecurity company, but they do some custom chip design work. So sort of not a chip stock, but it sort of is. Again, great business. It's not beating the average chip stock, but we think this will be a steady growth business for years to come. So because of kind of the adjacent industry position to chip stocks, we threw Fortinet into the portfolio as well.
Skyworks Solutions, Albemarle Corporation, and Indie Semiconductor. Three very different companies here, but let's go ahead and review these three in our portfolio.
So Skyworks is another one. It's rebounded nicely since October, but this is another one that I could use some improvement in managing during the peaks and the troughs because it's highly cyclical. Wireless connectivity chip company, they're branching out and getting into non-connectivity type of chips. They made a big acquisition a couple of years ago to do so. I still like this one, but at some point we'll need to trim as primarily the smartphone market. Apple represents basically 2/3 of their revenue. We'll need to trim this one at some point during the next upcycle. Albemarle, not a semiconductor business, top lithium producer. So obviously lithium, a main ingredient in lithium-ion batteries, which power all of our mobile devices and EVs. So we think it's a nice adjacent chip industry component to add here. This one's been all over the board, basically the worst performer in the portfolio, as you can see the red there. But this is another area where I think we'll branch out in maybe the coming months, and we'll talk about that in a bit. We want to do some more stuff with suppliers and basic materials. And then Indie Semi, this is another small cap. You won't find it in a chip stock ETF. They're betting big on automotive technology. It's had a nice run in the last recent weeks since their fourth quarter 2022 update. So we did trim recently. We took our profit off the table. Again, I think this is going to be a highly volatile stock. So just trying to manage some of that volatility and took a little profit off of the table in this one.
All right, thank you very much. We only have two more, Cadence Design Systems and Synopsys. And these two are similar, correct?
Yeah, two peas in the same pod, basically. They're both top EDA companies, electronic design automation software companies. We've done a number of videos on these two. So we own both, kind of add to them on an occasional basis, sort of like a dollar cost average plan. We like it because they're chip stocks, but they're subscription software businesses as well. So you get some of the you get the growth from the semiconductor industry, but the consistency of a subscription software business. Premium priced stocks, but we think for good reason. So we kind of just add to both of these on a regular-ish basis, pick up a couple shares here and there.
Okay, thanks, Nick, for going over each of those companies in our stock card portfolio of chip stocks. So in that portfolio, you had a lot of green, not a lot of red. In fact, you told me that it's up 56% in the last 6 months, which is significantly more than the market in general, and even more than the VanEck ETF that you mentioned.
That is correct. So over 56% performance in the last 6 months from our portfolio of chip stocks versus 44% for the VanEck Semiconductor ETF, SMH.
All right, very good job. So we'll continue to monitor this. Maybe you can just tell us what your top 3 stocks for 2023 are in this portfolio that you showed us.
Yes. So our top 3 buys at the moment are AMD, Qualcomm, and Applied Materials. And again, we're still bullish on chip stocks, but we think the run up is going to cool off going forward. So we're getting a bit more picky with our buys versus back in October. It seemed like everything was just cheap and a good buy. We're getting a bit more picky. So at this point, those three, AMD, Qualcomm, and Applied Materials, are our favorite picks. And overall, though, I think I would just reemphasize, it seems like we're at the dawn of a new bull market. AI, that is to say, basically computing-based automation, is going to be a key investment theme over the next, let's say, 5 to 8 years. So we still like all of the companies in the portfolio. We have some new ones that we're adding in here and that we'll talk about. But again, yeah, our top three at the moment for 2023: AMD, Qualcomm, Applied Materials.
Okay, thank you for going over those three companies. So again, I want to send this back to all of the people that are watching this video. Thank you very, very much for supporting us and coming back, and especially for your feedback. We've had some really good comments and feedback from all of the viewers, and we really, really appreciate that. Moving forward, we really want to hear a little bit more from you. We need a little bit more feedback. We've gone over our stock card, chip stock portfolio, but that, of course, is not our comprehensive portfolio. Would you like us to cover semiconductor adjacent companies as well? As many of you have seen our semiconductor flowchart, you know that there is a vast number of moving parts to the industry. So let's get some feedback as to whether you want us to cover those companies as well.
Yes, and since you're talking about the portfolio overall, we will mention going forward, we're no longer going to update the stock card portfolio. If you find it helpful, please let us know. We're experimenting with some ideas to provide some more live and more contextual portfolio updates directly here on the channel. So we'd like to hear from you. If you find that feature helpful, please let us know. Stock card has just become kind of cumbersome for me. It's an extra step in my research process whenever we make a buy or sell to have to log into a separate place to update that. So if you find it helpful, let us know, and we'll figure out some way to provide some more live updates on what's going on in our semiconductor portfolio.
The other thing we really would like some feedback on is, why are you watching these videos? What makes you come back to the video? What makes you continue coming back to our channel? What is the information that's really valuable to you? Is it Nick's beautiful face? Is it the company coverage? Is it the portfolio? What exactly is it that you find valuable?
Well, I've heard from some that they want to see more of you and less of me, so maybe that's one thing. But yeah, in addition to that, what makes you skip a video? Not many of our videos are getting watched broadly by the whole community. So if you're skipping videos, why is that? We'd really like to home in on what's most valuable and skip what is least valuable. And then also going forward, do you want more of the same, kind of this kind of random hodgepodge, my stream of consciousness on what I'm researching at the moment? Or do you want something a little bit more, something a little more precise? So we do have some ideas that we're trying to flesh out here, and we'll make a community poll on this. But one thing we don't want to do is make another subscription service. There's literally countless thousands of subscription newsletter services out there already. So that's not what we're interested in doing. We're thinking more of some sort of a la carte business as we try to figure out how to put it frankly and honestly, how to monetize this channel. It's been a tremendous amount of work and effort from us. So we're trying to figure out how to add value that makes sense for you. One idea is an a la carte service, perhaps a monthly live session with an update on the portfolio, a live Q&A session. Another idea, a Discord channel or some sort of similar chat and making some sort of annual access to that. And then, as Casey mentioned, expanding to more adjacent industries and more charts, like our handy dandy semiconductor industry flowchart on how these different industries work. So, for example, we've delved a little bit into cybersecurity. We've delved a little bit into basic materials. If you find learning about those adjacent industries helpful, let us know if that's the most valuable to you.
Yeah, thanks, Nick. Ultimately, we're going to continue making these videos. If you do want to leave us a small tip, feel free. We have a link in the description for a coffee account. We drink a lot of coffee here at Chipstock Investor. It's what fuels all of our thought processes, really.
Ko-fi.com, ko-fi.com. At this point, that's how we're going to experiment. Monetizing the channel, basically just off of tips. Maybe eventually, someday, YouTube will share its ample advertising revenue, just a little bit of it with us.
Okay, that's our 6-month video. So, Nick, do you have any final thoughts before we sign off here?
It's been an awesome first 6 months. Really enjoyed having all of you along for the ride. We hope that you've found these videos helpful and profitable in your investing journey. Nothing going forward is really going to change. We're going to continue making these random videos based on the research that we're doing. So hit us up. Let us know what's working for you, what's not, and we'll continue to improve. So thank you again so much, everyone. And we'll see you again real soon with some more semiconductor stock and business analysis.